Hello, and welcome to another episode of the Markets at a Glance series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So I will be taking you through today's session. And on this session, we'll be covering quite a number of things. One, we'll look at the key market trends or key market news that are influencing the markets today. Then we'll be looking at the economic calendar and trying to revisit what happened in the morning during the Bank of Japan press conference. And once we go through that, then we do some technical analysis in trying to understand what might be in store for us as we continue with the week. So I'll be starting with a Twitter post I made earlier in the day, or rather an X post. So the key market news that are moving the markets today are as follows. One, the Bank of Japan chose to hold interest rates at negative 0.1% this morning. The Bank of Japan also left unchanged a loose upper hand on 1% set for the long-term government bond yield, and that's basically the 10-year bond yield. So the board stated that it will patiently continue with monetary easing amid extremely high uncertainties at home as well as abroad. So clearly, out of market participants were expecting the Bank of Japan to hint at a possible early rate hike going into next year. But since the Bank of Japan did not hint at any potential rate hikes, chose to maintain its ultra easy monetary policy and held interest rates at negative 0.1%, the resulting performance was basically Japanese yen that was losing to the dollar as well as to other currencies. So we saw the big rally happening here. And of course, during the market snapshot earlier in the day, we mentioned that this is an area of interest or a target point, and this is a price level of 144.876. So for those who attended the market snapshot in the morning, we were able to identify this particular trend line as a potential decision point for USD JPY. So as you can see, the market eventually got to the target, found resistance, and now what we are seeing is the dollar losing again against the Japanese yen. So it means that this particular trend line remains very pivotal for USD JPY traders. And now that it has held, there is potential that we could be seeing some further downside momentum coming in from USD JPY pair. So from the dollar index, you can see that we now have a break. So after a day and a half of sideways momentum, almost 2 days, we have finally gotten a breakout in the USD index movement, where the dollar now continues to weaken against other currencies. So in this case, I expect some further downside momentum, which should be seen across board. So with the dollar being weak, in this case, we are seeing the Japanese yen strengthening against the dollar. Then for pound USD, you can see the rally continuing. So in early morning trading, we were using this area as a target of 1.27172. The market has already hit that and broken. And now the next target remains the previous high that we saw last week. And this is 1.27897. However, we cannot rule out a potential retest of this area. So it's quite common that once a market breaks a resistance level, it would make a pullback, bounce, and then continue in the same direction. So that should also be priced in as we continue speculating a potential rally to 1.27897. So the next section of the tweet, I believe I missed sharing this. Next section is on San Francisco Federal Reserve Bank President Mary Daly. She basically said on Monday that cuts to the Fed's benchmark rate are likely to be appropriate next year because of an improvement in inflation this year. So with the last reading of US inflation dropping to 3.1%, it basically shows that US inflation is on course to get to the Fed's target of 2%. And if we get that, maybe in the month of December or January, then a potential rate hike may come as expected, and this is expected to be in the month of March. So with this happening and Fed members commenting more that rate cuts are needed, then we have seen speculation on weaker dollar following the rate cuts. So in this case, we are seeing the dollar index being weak, and as we have just seen, the dollar index has broken the range and is now trading lower. So we could be seeing that as a continuous trend for the day. So another key thing driving the markets is that a US-led coalition of 10 nations to counter Houthi attacks on vessels in the Red Sea. So after over 10 global shipping companies suspended the route, citing insecurity and high insurance costs, this theme could bring back normalcy in the Red Sea. So what we know is that the Houthi guys have been attacking and stealing ships from the Red Sea in what is basically being described as a piracy. So as this continues, insurance for shipping across the Red Sea has become quite a challenge, mainly because insurance companies view this as increased risk and they have increased their premiums, leading to much more expensive business. So the top shipping companies such as Evergreen, Maersk, and so on, they have already cut their ships from using that route, and this is expected to affect global supply chains. So an estimated 12% of global business goes through the Suez Canal. And in this case, if the route is disrupted, then supply for oil as well as other commodities could be disrupted globally. So 10 nations have joined together with the US and sent troops to that area to basically secure the area and ensure that these companies can be able to ship their products successfully. So, however, the reaction we saw in the market was that yesterday, oil markets made quite a strong rally upon this fear. But then today, they have subsided. We are seeing oil prices coming back downwards. And this could be a relief as people are very confident that this group of 10 nations will bring normalcy back to the Red Sea and potentially business will be smooth again. So on the next part is about the US Securities and Exchange Commission, SEC, which has delayed its decision on the listing of Grayscale Ethereum Futures Trust ETF, according to a regulatory filing on Monday. Grayscale joins a list of firms whose petitions have either been delayed or denied by the top US markets regulator. So the decision has been pushed to May 2024, or rather next year. So there was a lot of speculation around this approval of Bitcoin as well as Ethereum ETFs. But then the more the SEC continues delaying it, then the more we see delayed momentum in the markets. So this approval of ETFs is expected to bring in some good volatility and potentially some strong upside momentum. But now, since these decisions are being delayed, then it means that investors might have to wait longer, and perhaps even perhaps we could see a coincidence or basically two key events happening at the same time. And one is the Bitcoin halving event next year, and at the same time, approval of Bitcoin spot ETFs. So if this happens at the same time next year, then it basically builds a strong case for bullish momentum. So on the geopolitical scene, we have seen several geographical events happening this week. So one, on Monday, a volcanic eruption in Iceland captivated observers as vibrant bursts of lava and smoke lit up the night sky. So the event followed weeks of seismic activity, leading to the evacuation of a neighboring town. So that's a key concern on Iceland. About how it affects the market today, we are yet to have an angle on that. So second, a devastating earthquake measuring 6.2 magnitude struck northwestern China, claiming the lives of at least 118 individuals and leaving hundreds injured. So the remote and mountainous region was shaken while many were asleep, causing destruction of roads and infrastructure, triggering landslides and partially burying a village in silt. So that's also expected to have an angle on the markets, especially stocks of companies operating within the area. So in other news, for individual companies, we saw Google has agreed to pay $700 million and to allow more competition in its Play Store, App Store. According to the terms of an antitrust settlement with the US states and consumer filed in federal court on Monday. So in this case, Google has been actively pursuing ways of strengthening its dominance. And one of these has been creating a very strong monopoly, especially in its Play Store application. So it has been under investigation by the US antitrust authorities. And in this case, they are bound to pay a 700 million fine and at the same time allow for more competition in its Play Store. So in this case, there seems that Google will be taking a hit and potentially could be seeing a reaction once the market opens. So the White House has issued a warning that US aid to Ukraine is dwindling and on the verge of expiration. With just enough pre-authorized funding for one more aid package this year, the administration faces the challenge of obtaining congressional approval for further assistance. However, this task has become more challenging as a rising number of Republicans are obstructing Ukraine aid, urging President Biden to prioritize domestic concerns such as securing the southern border. So we know that this has been quite a fight over the last couple of weeks, where we have seen Republicans calling for President Biden to act in securing the border, that is the southern border of the US, where a lot of immigrants have been passing through. Whereas, on the other hand, Biden, on top of Biden's priorities, has been securing funding for both Israel and Ukraine. So now that they're in a deadlock, there's a good likelihood that no more funding will be sent to Ukraine after the end of this year. And in that case, it basically increases the chances of Russia winning the war. So the end of the Russia-Ukraine war would mean that there's more confidence on European stocks. And in this case, we could be seeing European stocks making a step higher. So lastly, Adobe has dropped its $20 billion acquisition of its smaller competitor Figma, following concerns raised by the European and UK regulators about potential competition elimination in the product design software market. So the market-dominant Photoshop owner, known for products like Illustrator and Acrobat Reader, announced that both companies mutually agreed that there was no clear path to regulatory approval. So in this case, we are seeing the European and UK regulators are stopping the merger between Adobe and Figma. And as a result, it basically means that the benefits the two companies were bound to enjoy if they combine together are no longer possible. And in this case, the two companies may have to go out on their own. So that's the top key highlights of the news currently influencing the markets. And of course, in the economic calendar, we have a key event coming up, and this will be at 4:30 p.m. And this is the inflation rate data for Canada. So annual inflation is expected to drop to 2.9 or even 2.8%. And this is from 3.1% in the previous month. Core inflation rate, on the other hand, is expected to drop to 2.5% from a previous reading of 2.7% in Canada. So month-over-month change in inflation is expected to be negative 0.1%, down from a positive 0.1% in the previous month. So core inflation rate month-over-month is expected to have increased 0.1% in the month of November, and this is compared to 0.3% increase in the previous month. So all analyst estimates are indicating that there is a potential drop in Canadian inflation, where annual inflation would drop to 2.5% or to 2.5%. For the month of November, a drop in negative 0.1% and a slight increase in core inflation on the month of 0.1%. So this data is expected to increase volatility in Canadian dollar pairs. So in case we see a much weaker inflation, let's say inflation drops more than this, and maybe we see 2.7, 2.5%, then in that case, we might consider shorting the Canadian dollar because it will encourage the Bank of Canada to start considering cutting interest rates early next year. So a sharp drop in inflation would mean that we are closer to rate cuts, and in that case, a much weaker Canadian dollar. On the other hand, a spike in inflation, let's say back to the same level of 3.1% or even higher, then in that case, we could consider that the Bank of Canada may hold rates higher for longer. And in that case, it becomes positive news for the Canadian dollar. So that's how we will be looking to interpret the news and trying to understand the difference between the outcome and the expected values and use that to make inference on trading Canadian dollar pairs. So as we approach the end of the day, we'll also be looking at building permits at also at 4:30 p.m., as well as building permits month over month and housing starts in the US. So this is an indicator in the real estate sector in the US. So building permits are basically people who are basically applying to start construction. And if they got the permits, then we'll be looking at that number. And it's usually very strong indicator of strengths in the real estate sector. So if more people are applying for building permits, then it basically means that they have more money. So just because people got permits, it doesn't mean that they will start construction immediately. It basically is an indicator of how people feel about the economy. So when you see more and more people applying for construction, it means that the economy is good and strong. So the previous number was 1.498 million applications, and we're expecting this to drop to 1.47 million, basically indicating that we're expecting less people to have applied for building permits, mainly because they have a weaker outlook of the US economy. So housing starts is the number of new housing projects that were started in the last month. So in this case, we look at the previous number, which was 1.372 million, and we're expecting this to drop to 1.36. So housing construction is also expected to be slowing, and both indicators, if they slow, they should be consistent with the Fed's expectations, which has been looking to slow down the US economy, including the real estate sector. So a slowing real estate sector would be good for the Fed, meaning that potential for rate cuts continues and potentially a much weaker US dollar. So that's it for the day. So as we welcome the New York session, the charts will be majorly focused on is on the majors gaining against the dollar. So in this case, pound USD expected to reach last week's high. So as for Euro USD, also we expect something similar, some further momentum upside. I remember in the morning during the analysis, during the snapshot, we identified 1.09634 as a potential target for any buyers in the market. So eventually the market got to that level. It was a previous high here. And as you can see, immediately the market has hit that area. We are seeing some form of pullback. But then if the dollar index continues weakening, then a continuous rally to 1.10156 could also be targeted. So as you can see, the dollar index remains weak, though it's attempting to come back, and we expect this to be a trend. So a weak dollar means that the Canadian dollar continues strengthening, and in this case, we could be seeing some further downside momentum, especially after the market broke this area. So we saw the breakout market pullback. We have not seen an acceleration of the move. So it looks more of a fake out, but overall the dollar is weakening against other currencies. So as for gold, we have seen the price trading within this triangle. We just bounced off the lower trend line. So now we are headed for the upper trend line. So at least we expect the price to get to the upper trend line. And in this case, it's a price level of around 2036. So $2,000.36. This is for an ounce of gold. So as we continue with this upwards momentum, I expect the price to at least get to 2036. So for Audi USD, a clean break of this consolidation that lasted 3.5 days. So the market broke and is now accelerating higher. So the overall expectation is to see some further upside, and the new target becomes 0.6818. So clearly a very strong bullish momentum, some sideways momentum here for a while, and now that we have a break means that we look for positions going upwards. So as for the Nasdaq, we managed to see this high. Market pulled back down yesterday, and today the market has really struggled to get to yesterday's high, but then we have already hit that, and from the 15-minute chart, we already have a shooting star candlestick indicating a rejection of higher prices, but then the market is quite persistent, and we could be seeing the market cruising higher. So as a technical price action trader, what you do in such a case, The first sign is usually a sign of weakness, and then you observe for confirmation. So we don't have confirmation of bearish entry. So it basically means that there's a good likelihood that the market eventually closes above yesterday's high of 16,765. Also remember, we are on the verge of hitting another all-time high. So the previous all-time high was 16,768.75. And what we have here is 16,700 and what? And 56. So in this case, in the last 1 hour candlestick, we managed to cruise into a new high, and perhaps there's more room for upside. So we should be seeing the Nasdaq going for another all-time high potentially during the New York session. So there is still that likelihood that the market eventually forms another all-time high. And as you can see, now that we have hit this level, this could potentially be a breakout movement, which could lead to price acceleration. So as for US30, we are testing the previous high. So a potential break above this would basically form another higher high. So this is a price level of that 7,404. So a break above that would mean that price accelerates higher. Of course, for the S&P 500, we're also testing yesterday's high, and the market is perhaps even waiting for the New York session to determine if there is more room for upside. So as we get into the New York session in the next 8 minutes, then we should be seeing some volatility coming into these pairs. So Brent oil, which is something we discussed early in the morning, is that there's a very strong trend line here determining the resistance. Yesterday, the market was unable to break, so pulled back downwards. And then today, we have seen gradual drop, but the gradual drop is not that significant. So using smaller time frame, such as 15 minutes chart, you can see that it's more of a sideways momentum throughout the day, with this being the resistance, whereas as for the support, we haven't had much to work with, only 2 lows that have appeared today. So it seems like the market is just trading sideways, consolidating, awaiting the next market moving news. So we don't have much of a momentum in oil prices today. So for the French 40 index, we are seeing the market bouncing on this diamond. So perhaps we should be seeing the market now headed towards the upper trend line on the diamond. So we could be seeing price making rally to this point for the rest of the day. So Chinese yuan remains very strong against the US dollar. So after early morning losses against the dollar, you can see it has resumed with some good strength, and we could be seeing an acceleration downwards to 7.11171, and this could be happening as we approach the week. So what we are basically seeing here is the Chinese yuan strengthening against the dollar, and of course from the dollar index, we saw the dollar being pretty weak and making a breakout to the lower side. So this may explain why we are seeing a strong movement in Chinese yuan. So European equity indices, in this case, we had the head and shoulder pattern completed yesterday. Market broke towards the lower side and then pulled back upwards. So in this case, now the area to watch is on this new trend line that is seemingly emerging here, because the idea is that the market gets that area and then potentially moves back downwards. So it's quite common for these kind of patterns to bring in that kind of energy. So definitely in this case, after the completion of the pattern, I would say the market went straight down and is now moving back upwards towards the upper trend line. So in this case, we can use this as a point of reference where the market is now perhaps headed here, and then what happens here is what will determine or not whether there is a short selling position. So if we see a very strong rejection of this price level and price moves down, then the new target becomes 4,494. So with Bitcoin, as we had analyzed, this was a major resistance point. So an attempt to go up would be met with resistance. And from what we are seeing from the price action, it basically seems like a rejection of higher prices. So we could be seeing some further downside momentum for the day. So New Zealand USD looking to break a major resistance level. So a key level to observe 0.62452. So we observe this area looking for signs of a breakout and a strong entry by buyers. Then from there, we should be able to identify a nice direction. So remember, it also happened with the Audi USD. We already have a break and prices accelerating. And given the correlation between the two pairs, then for New Zealand USD, we may expect the price to break and move higher. So US oil also doing something similar with Brent oil. So we saw the acceleration yesterday, market erased some gains, and now we don't have much happening. It's the price just moving sideways for the day, with more attempts to push lower compared to attempts to push higher. So USD against the Swiss franc, we examined this yesterday, and we saw that there is a high likelihood of the price dropping. So we also did it today, earlier in the morning, and identified this as a potential target of 0.86296. And it seems like the market has already hit that price target and is now looking to bounce and reverse. So now this is a key decision point where you basically observe the price action and identify what happens with the next couple of candles to see if there's a reversal or a continuation of the bearish momentum. So if there's a reversal, we go long, but then a continuation, we basically go short. So one target has been reached. So now we wait, observe, and see whether there's continuation or reversal. So that's it for the day. And thank you very much, guys. So let's see if there's any question before I end the session. Hi, J-Scode. Hi, Steven. Do you think the officials who are trying to dampen the cuts talk will have their way going forward? No, I think what is currently happening is that the US inflation rate has not dropped to the target yet. So the target is 2%. So if you think about it outside the box, it's more like the market participants are trying to corner the Fed to cut interest rates immediately the inflation gets back to 2%. So in this case, inflation hasn't hit 2% yet. So I don't think Powell will be cutting interest rates soon until we get to the 2% target. So he has maintained that they're not moving the target, so they have to wait until inflation gets to 2%. And as long as that is not happening today, then interest rates might remain higher for longer. So everyone will be watching out the inflation rate data. And of course, the Fed's favorite will be the PCE price index this week on Friday. So that's the key driving data point. So in this case, whether the talks will try to dampen the cut talks will have their way going forward, it doesn't depend on them. It depends on the data coming from the US economy. And the most important data for that case will be the PCE price index. And this one comes on Friday. So watch the data with more weight compared to the Fed commentary. So hey, Mr. Karani, Jason, and Takeout. Thank you very much, guys, and I hope to see you on the next session. So remember, the market snapshots continues every day, Monday to Friday at 11 a.m. And this should be the last week that we are covering the markets. So from next week, we are looking to also take a small break, enjoy Christmas with our families and friends, and then we resume on the first week of January. So thank you very much, guys, and I hope to see you on the next one.